Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Wednesday market webcast. Okay, so, hey, the Bears fought back, right? And they continued to fight back. They got below the 9-day, below the 20-day. Let me zoom this once. So, 9-day holds as resistance yesterday. You break the green line, which is your daily mid-band, and you get down into the lower band. So when you have tight bands, you can have little fake outs, fake out to the upside. Potential. Now you have a downside. You have a lower band ride potentially opening up to the downside here. So, does this want to be support? Are we going to bounce between the bands? I mean, that's not the worst thing in the world. I mean, if you're going to give me, 100 and, 100 and, literally 100 handles of volatility back and forth, I'll take that every day of the week. The hurdle that the Bears are having trouble converting is this monthly pivot. So let me zoom this out one. Monthly pivot with support back here on May the 4th. You can see they've tried to take it out yesterday and in Globex today. We went and did 41.0375 yesterday, but you can see it's trying to hold here. Here's your hourly mid-band that's trying to be resistance. You've got monthly pivot trying to be support. This low was a lower low versus what happened back on May the 4th. So it puts the Bears in a good spot if they can execute. They've got to close below monthly pivot, stay there for another day, engage that lower Bollinger Band, that bottom yellow line we just looked at on the daily chart, and get things moving to the downside. If they can do that, that opens up things like the 50-day exponential down at 40.64, and then, we'll see what we have from there. But they did a very good job yesterday, the Bears did, of sealing off this 9-day early on in Globex, doing a good job of sealing off the 20-day off of the Europe Open. We talked about all this yesterday. And then, not necessarily, they certainly didn't capitalize on the lows yesterday, but they also didn't get nuked, where they do the little V recovery in their face. They held that off. It was a very choppy afternoon. So Room did 80-something handles yesterday. We did the majority of it before 11:30 in the morning. The afternoon, we were in 3 separate trades where we took 10 handles or more on the first third of our trade and then ended up getting stopped out. At getting stopped out where we got in. That's, that is indecisiveness. And there was a ton of indecisiveness yesterday in that 41.40 area. So we'll see today what they're able to accomplish with regard to hourly mid, monthly pivot, and trying to break this low. If you can seal this, if you can get below 4,100 and stay there, it opens up another 30 to 50 handles to the downside. If you're the bulls, what do you want to do? You need to start closing above the 20 again. Because one of the baseline assumptions that we make at our place is contracts, stocks, whatever it is that want to trade between the middle Bollinger Band, the 20-day simple, and the lower band, those are sell rallies markets. Sell rallies markets. Between the middle and the upper, those are buy dips markets. So right now, on a closing basis, we're in a sell rallies market. I'll be very interested to see if that persists and we continue to make lower lows here. All right, that's all I got. Everybody have a fantastic day. Be safe, be healthy, take care. Trade them well. Come check out the room. I'll talk to everybody tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.